A new report today from economists predicts some bright spots for Hawaii's economy in the near future. Tourism will soon return, and the labor market is getting stronger. But as KITV4's Diane reports, the state will also be facing the problems of inflation, supply chain issues, and a possible recession.
The streets of Waikiki and other tourist hotspots will soon fill up again, according to a forecast from the University of Hawaii Economic Research Organization, or UHERO, in its second quarter forecast for this year.
The recovery of Japanese arrivals will begin later this spring as travel restrictions are eased, and as COVID-19 falls back throughout the region, visitors from other international markets will start to arrive in larger numbers during the next 2 quarters.
That's welcome news since the state's data shows on Wednesday just under 180 visitors from Japan flew into Hawaii. Compare that to pre-pandemic stats of over 4,300 Japanese visitors on May 11th, 2019. Felecki says the North American travel market is strong, and overall visitor arrivals will exceed 90% of pre-pandemic levels by year's end. Another piece of good news, the labor market is edging up, but
while the share of people employed or looking for work has now largely recovered, the population has declined, mostly on Oahu, meaning the number of available workers is now below its 2019 level. This will constrain future growth.
UHERO says the global economy is worsening, which poses substantial risks to Hawaii's forecast.
The Russian war on Ukraine pushed up energy and other commodity prices. Supply chains are once again threatened by wide-ranging shutdowns in China as the country tries to enforce its zero-COVID policy.
He says these factors will restrain growth for the next several years.
Inflation is now the highest in decades. The Fed is signaling a rapid pace of monetary tightening, and mortgage rates are already up by 2 percentage points since the end of last year. These factors will significantly restrain growth for the next several years.
UHERO says a potential moratorium on new water meters due to the Red Hill water crisis threatens new home building. No more federal stimulus checks is also hitting people's pocketbooks.
Now, incomes were protected during the pandemic by the support from government, but the end of the support means that incomes have now taken a hit.
He says inflation has raised household costs by an average of $3,600. Ongoing tourism recovery will offset these problems in Hawaii, but he says they nevertheless put us at increasing risk of recession. Diane, KITV4 Island News.